number one. We've basically closed the gap from the DeepSeek sell-off, but we haven't quite all the way yet. If we do, that's big. Semiconductors need their leader back. Nvidia pinned near 140 bucks is a little bit of a limitation to some extent in some of the momentum stuff. So that's important, number one. I do want to see that because here's what happened in DeepSeek right there. Boom. Now we've basically closed that gap. We have yesterday, actually. So the question is whether or not we extend. A lot of technicians believe the gaps just get closed. So we've done that. Now the question is, do we actually have momentum at 140 bucks, which is a really important level. 140 bucks has a ton of volume, and it goes back to Nvidia's high from June last year.
The founder of EMJ Capital, Eric Jackson, gave an explanation of why he thinks DeepSeek won't have a detrimental effect on Nvidia. Nvidia is a prime example of artificial intelligence in general. It truly took it down because it was so shocking. I thought it was overdone, so I stuck with it. And even if we need to be more efficient in the way we construct these models, I don't believe anyone will turn down the chance to obtain some Blackwell or Rubin chips next year if given the chance. Therefore, I believe that Nvidia's order book will be very strong. Nvidia should be alright in my opinion. For Nvidia, simply exceeding earnings projections is no longer sufficient, and as growth slows, the stock will continue to be negatively impacted by the lofty expectations. For the fiscal year that ends in January 2026, Nvidia's forward PE ratio is around 31. The stock was not helped by an 8.5% EPS surprise. Following a 5.6% EPS surprise in the second quarter, a similar pattern emerged. By the end of 2026, it's hard to imagine Nvidia keeping its gross margin in the middle of the 70s. Nvidia has previously disclosed a decline in its gross margin from 78% to 74.5% during the past 2 quarters. Competition comes next. The Trainium 3 chip, which is scheduled for release by the end of 2025, was recently revealed by Amazon. The chip, which is made using TSMC's state-of-the-art N3 technology, is anticipated to be 40% more power efficient and twice as fast as the previous generation. According to reports, Amazon's new silicon will be used by the computer behemoth Apple. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Meta had this big run recently, gain after gain. It seemed like week after week. It was almost a 3-week run here. Does it make sense to kind of reset that happened yesterday?
Does make sense, and I think it's a great question because it's like, what is next? And I think what we're seeing is that Meta is getting a new look, a level set, if you will. However, I'm anticipating that this is not something that will be an enduring trend. That is, Meta is investing $60 billion to $65 billion in its AI infrastructure and assets. And this is aligning with the mega trend throughout the entire industry. We're seeing all the verticals really lining up to become more adept at AI. And this is, I think, where Meta has a strong opportunity. Already they brought on, for example, Clara Shih, the CEO of AI at Salesforce, to head up their efforts to really become more adept at selling their AI capabilities to enterprises, capitalizing on fast-growing B2B opportunities. And I think this is going to strengthen their competitive position against other hyperscalers such as Google, Microsoft, and actually AWS. So I think this is a brief pause as Meta really is restocking itself to really become a more effective competitive force in 2025.
This is just a temporary pullback, in other words, in your view, when you see this as more of a continuation of a growth story for Meta?
That is it. Yeah, that's it in summary. And it's other factors involved here. For example, Meta is building out its largest data center to date. That is in the Richland Parish of Louisiana. That's 4 million square feet. And it's really doubling its stockpile of GPU technology, going from 600,000 GPUs to 1.3 million by the end of the year. And this is aligning with other important trends. For example, Future of Intelligence data indicates that we're going to see a 30% CAGR just in AI software and tools over the next 5 years. And this is good news for ongoing initiatives such as Meta AI, which is aimed to reach over 1 billion active monthly users by the end of this year alone. So in essence, Meta is going to be a major integral player in how AI evolves, not just in 2025, but also into the foreseeable future. And these investments are going to make a difference.
A great point. And Mark Zuckerberg had always said that he wasn't moving away from the metaverse because remember, when he initially rolled out the idea of the metaverse, investors weren't super keen on it. He has doubled down on it, called this year, quote, a pivotal year for the metaverse. Company also developing an AI agent with coding capabilities that would basically be comparable to a, kind of mid-level engineer. What do you think are the business implications of that?
Well, I think it's what we're seeing with AI overall, more efficiency, and that will increase more demand and also affordability. And I think when it comes to coding, I think that's something that is flying under the radar a bit, but it's an important dimension here that is helping to make businesses more efficient. It doesn't mean, okay, all these folks who are in coding are going to be replaced by AI. What AI is going to do is make their ability to code all the more efficient, all the more better outcomes that align really with the business needs of the organization that's using Meta AI. So I think that's an important aspect here. It's not just about, okay, can we get more GPU clusters to train to speed up training and inferencing and so forth. It's about the end-to-end AI proposition, and I think Meta is going to have just that, solutions that can address enterprise needs, because what they're really emphasizing here in the near term is having a partner that can help them right-size their AI training to make sure that they're taking advantage of AI in an optimal sense, that it's really truly aligned with their distinct business needs. And I think these are going to be difference makers for Meta.
Using nearly 9 trillion pieces of genetic data from over 128,000 different organisms, including bacteria, plants, and humans, the Evo 2 AI system can read and design genetic code across all forms of life. Scientists hope that this technology will drastically speed up research by spotting patterns in vast amounts of data that would normally take years to analyze by hand. Nvidia, a semiconductor manufacturer and research partner, announced Wednesday that it has developed what it calls the largest artificial intelligence system yet for biological research, with the goal of accelerating advances in genetics and medicine. According to scientists, this could aid in the development of more specialized medications, such as gene therapies that exclusively target particular cells. 2,000 Nvidia H100 processors on Amazon's cloud infrastructure were used to build the model. Evo 2, which was created in collaboration with Stanford University and the Arc Institute, is now openly accessible to researchers everywhere via Nvidia's BioNeMo research platform. According to Brian He, an assistant professor at Stanford University, creating novel biology has historically been a time-consuming, uncertain, and artisanal process. With Evo 2, we enable researchers to better understand the biological architecture of complex systems. Beyond medicine, scientists think the technique could aid in the development of new methods for decomposing pollution and crops that are more resilient to climate change. The initiative combines the computational capacity of Nvidia with the $650 million funded nonprofit research organization Arc Institute, which was established in 2021. To address long-term scientific issues, the institute collaborates closely with Stanford, UC Berkeley, and UC San Francisco. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.